All right, welcome back. Thank you so much for watching Morning Cafe. Thank you for staying with us. And right about now, we want to talk about insurance. It's Biashara Tuesday. And, you know, insurance is not something that we talk about with our friends when we sit down and say, maybe ask a friend, do you have insurance? Do you know what this is? So that is what we want to talk about today. And we are having Anthony Mwangi, an insurance expert, in studio with us. And he'll get to share with us a little bit about insurance. What is it? What are some of the different aspects about insurance that we don't get to hear about, and the fine lines on everything just concerning insurance? But as usual, I want to invite you to have this conversation with us on our social media platforms. We are on Facebook and YouTube at TV47 Kenya, and on X at TV47 News KE. There will be a number on your screen as we continue this conversation. So call in. Anthony is here to answer all the questions that you have. But Anthony, good morning. How are you doing?
Good morning, Anne. How are you?
I'm doing good, thank you.
Happy New Year.
Happy New Year. Happy New Year. We are saying Happy New Year till February, right?
Thank you.
So I want us to start this conversation on a very basic level, Insurance 101. When we talk about insurance, you see, what comes to mind is maybe health insurance, life insurance, car insurance. I don't know if there's something like house insurance, you know. So what are the types of insurance that we have?
Good, thank you. Insurance is a very wide subject. If we start basically mentioning one after the other, most likely the show will be over. Because you're looking at more than going to 60 different kind of insurances. So the best perhaps we can then be able to do is to say the major two distinctions about insurance. And this is now what we call in our industry long-term insurance and short-term insurance. Long-term being life insurances. This is where we take things like education policies. This is where we take life insurances. And then the other distinction is general insurance that caters for properties.
Yeah.
So those are the major distinctions when it comes to the field of insurance. The long term and the short term. Short term now is where you take your motor vehicle for 1 year. That we consider to be short term. Long term is where you basically you're taking this cover for the longest. Let's say it's a savings scheme. Let's say it's a policy to cater for your children's education or for your retirement or something like that. So that's long term because it could range from anything between 5 years to 25 years. So the major two distinctions is life and general. General for property, life for somebody's life, and it's long term.
Yeah. I'd want for you to clarify on this general insurance. And you've mentioned long-term insurance, property. So aside from this property, what exactly falls under general insurance? If you're talking about, are they cars, are they houses, are they health? What exactly?
Yes. General now you reach from the fire, burglary, which is theft, motor vehicles, household insurance, which we call in our terminology domestic package. This is health, marine insurance, travel insurance when you want to travel, boiler, engineering policies. Like when you go to these big companies and big industries, you see those boilers. What we call goods in transit, you have seen huge trucks carrying goods in transit, livestock, crop insurance, all those are general insurances. So I think the big distinction is to say anything to do with human life other than medical, that is what is life insurance. Anything other than health, that is general insurance.
Yeah.
And life insurance is anything now to do with long-term life covers that cater for you as a person. But general is basically to the possessions and the properties that we own. So fires, when we say a fire insurance, when we say burglary, when we say theft, when you insure your mobile phone, when you insure your cameras, when you insure your glasses, all that, including our health. Because health is necessarily, we are not insuring you, the person per se. It is the financial implication when you go to hospital. That's why it is in the general side, because we cater for the finances, just like the way we do for a car. So when you go to hospital, you might fall sick, God forbid. But when you fall sick, then we come in and pay for your medical bills. That is why, though it is health and it looks like it is, like it's a person, it's covering a person, but what we cover is the financial obligations or responsibilities that you may have in the event that you fall sick. So, so we talk about general insurance, if we can perhaps take some of the most critical components of the general insurance, because that is perhaps what it's well known by people. Of course, cars, property, insuring houses, and one people really have not really put in a lot of effort to cover our homes. We spend so much time. I think for any single entrepreneur or business person or even a working person, a home is one of the most single concentrated assets that we put in a lot of effort. Why we don't insure it? Either it's perhaps why you called me here, so that we can demystify perhaps even the cost of insurance, because it's not expensive, that expensive being a relative word, but it is really affordable. So I think those are the major distinctions when it comes to insurance.
I love that you've mentioned to demystify the cost of having an insurance, and we'll be getting into that deeper later on. But you see, I was having a conversation with people in the streets, asking, do you have an insurance? And an interesting comment I got was, na insure maisha yangu alafu na insure aje na sina mtu. You know, and then there's a guy who told me people fear taking an insurance because maybe an insure and then akufe, you know. So that is the exact word that he used. So why is insurance, or maybe you can just tell us the importance of having an insurance in your life. You've mentioned something about health insurance, for instance, that it caters for somebody's medical bills. But looking at it from a broader perspective, what is the importance of actually having an insurance?
I think I'll be a little bit, I don't know how to put it, but let me just give an analogy of an umbrella. In most of the instances, we carry our umbrellas in either our cars or in our bags or any other carrier that you have. Even when there is absolutely no inclination that it's going to rain at all, because you know at some point in time, like yesterday, I think there was just a heavy downpour from almost nowhere. And I think that is how insurance operates. Insurance is supposed or gives us protection. So I think the fact that sometimes we misunderstand that word insurance, for instance, when it comes to health, you'll find somebody saying, mimi niko covered na damu ya Yesu. Or any other issue. And I'm not trying to slight Christians because I'm a good Christian. I'm trying to understand in terms of how we understand insurance. So the whole essence of insurance, although it can be broken in many ways, but if I can just say one word about the need for insurance, is to talk about giving you that peace of mind when you need it. What do I mean by this? You're driving your car and you don't want to have the challenges of thinking, what would I do if my car is smashed, if it is stolen, if it is swept by water. So that peace of mind that you buy, that cover, that cushion, that you know financially I am cushioned, that should there anything happen, then I can be able to go to this particular insurance company and they'll be able to pay me. So it offers protection. So there are covers that offer protection. Take something like motor vehicle. There is what we call cover for employees like yourself and me where we work. We call Workmen Injury Benefit Act. Actually is a statutory requirement. So they give us protection so that if anything happens to either the things that we own or we cherish, then we will be covered or they will be compensated in the event that there is a loss. So we offer that protection. It also cushions us from financial ruin. You would imagine then you have put up a factory, perhaps even on borrowed money in terms of lately loans or equity or any other way that you've put it, or even your own savings, and then it's gutted by fire. And I think we are not too far from we have seen what has happened to Los Angeles. We have also seen closer home in Mozambique, where almost an entire nation has been completely destroyed by flooding. Flood is also actually another type of insurance, covering devastations of properties and everything else. So that protection and financial cushioning ensures that if anything happens about my property or what I own or my life or my medical obligations, then an insurance company or somebody else called an insurer would come and step in my shoes with financial capability and redeem me if I have a problem. So we offer protection. We offer savings as well, if it's life cover, for instance, things like pension, education for our children, and even endowment policies that ensure that perhaps when we are not there, our dependents do not have to start from scratch. I think one of the challenges I find perhaps when, like the way you are talking about your friend they were talking about, is that we haven't taken insurance for what sometimes it is.
Yeah.
And that's why you see this part of the world in Africa and Europe and some parts of Asia particularly, we have a bit of a problem because we only think that insurance is supposed to cater for us, perhaps even in our own lifetime. If you take, for instance, some of these life covers, pension, it's not only for our own benefit in our own lifetime. They can also benefit the generations that we will leave behind us. It's the same way we leave property. For instance, like buildings, we work so hard. We buy property, some piece of land or a plot, and you put up an imposing tower or a rental power. Do we go with those things when we go? No. We leave them to the generations that are behind us, our children and our loved ones, so that they don't have to start and struggle how we did it. So insurance should also be taken in the same manner as a way also of investment, that it is something that I can actually bequeath my future generations. Because if I put a pension, for instance, that even in my old age, that pension will cater for me on the monthly incomes that it will be giving me, even when I'm gone. It is also part of my estate and can be bequeathed to my generation or my future generation. So I think we need to look at insurance from a holistic and big long-term, as opposed to lazima inisaidie sasa hivi. It is like for only today and for now.
Yeah.
It shouldn't be like that. It should be able to see it, and especially areas where we are looking at preserving our wealth and even keeping something for a rainy day. Those are critical conversations that we need to have for insurance.
Interesting. And I want to remind our viewer that, of course, you can be part of this conversation. I'd mentioned we are on Facebook and YouTube, TV47 Kenya, on X as well, TV47 News KE. There is a number on your screen. Call in and Anthony is here to answer all of these questions. Now, you've mentioned something around the lines of we have a poor insurance-seeking behavior as a country. Is there really enough education around insurance and why it's important? And do you think that we should really, really have this conversation or education around insurance? Because I think we should.
Yeah. I think we have a fairly bit of education. What I think we do have is perhaps, and with tremendous respect to our viewers, is a little bit of attitude. And I have always attributed this to, when did you hear of insurance in the first time? Perhaps you finished college and you're buying your first car, or you bought your first phone and somebody tells you, can we insure it? So when you hear something, and I think this is scientific, when you start hearing something past 21, 22, 23 years, if you had already formed some prejudices on some certain subject, which unfortunately is what has happened to insurance, I think our introduction to insurance sometimes is on the wrong side. We only hear the bad side. You wasn't paid this particular claim, or they refused to pay this claim. And therefore we have acquired some not nice names, not necessarily because that is the truth, but because of when we got this cover. I advocate, like you ask, what we need to do. Yes, we need to have more conversations. But I wish we could even have this conversation and start having them much earlier in life, like in school. I was introduced to politics in a book, in a history book. Far back there was a topic on civics, and it was called. It had nothing to do. There was a picture of the president of the day and his cabinet. I think that time there never used to be those reshuffles and stuff like that. And to this day, that almost photo of how even our first cabinet, the way when I was in school was, I still remember it. So I keep on asking, why can't we have insurance or generally they talk about financial inclusion and financial literacy of some sort where insurance as an industry falls, should be started then in schools. And then people will understand the whole concept of what insurance is pooling, right? That you bring small and I bring something small and we all put it together to form a big fund with this insurance company, so that if any of us have an accident, if any of us fall sick, if any of us has a misfortune, we go to that big fund that we have been creating over time. Now, the challenge now, and that's why you see there is also a lot of fraud happening in the insurance industry. I keep on thinking, I paid this insurance company 100,000. Now, but you paid the insurance company 100,000 shillings so that they can pay you 2 million. So where is the other 1.9 million shillings coming from? So we need to have these conversations, in my view, respectfully, perhaps in our secondary primary school if possible. And then people now will grow with the understanding and knowledge of the importance of insurance. Look at our saving culture, which is our saving bank as a nation, right? Other than now the cooperative movement, and not everybody is privileged to have perhaps a cooperative, because you need a certain threshold to be able to form a cooperative. But there are mechanisms in insurance like personal pension plans where you can actually start saving as an individual and you grow your money. So we need to have that sort of saving culture, which the insurance industry has given a platform in the pensions. But do people aware of that? Do people appreciate that platform? Or even if they do they trust it? So, but I question, therefore, at what point in time do we introduce insurance to ourselves? I think it's a little bit too late in the day. We need to have it early. I'm told, I don't know, since our days in universities, the class of insurance is shrinking, right? As opposed perhaps to the other disciplines of big comps. Because people think perhaps you're not even going to get a good job. But even if you don't work as a career in the insurance industry, you are a consumer of insurance services, because you need a medical cover. You need to secure your property and whatever else that you have. So can we have that conversation a little bit more? And because perhaps we started late, can we have this kind of conversation now more? Even as we ask our curriculum developers perhaps to kindly think of introducing insurance and the whole financial aspect a little bit earlier.
Yeah, interesting. Now, you've also mentioned something about there being a lot of fraud in all this insurance sector as of now. Now, what are you as experts and people in this industry doing that you also try to eradicate this fraud and lack of trust that is currently in the insurance sector?
I would say technology has come in very handy. For instance, you see people used to go to hospitals and you can collude with a particular institution. I'm not saying hospitals are fraud, but we have, like any other field, you'll always find there some bad potatoes in every sector, including ours. And or even a garage, or even an insurance company, or a brokerage firm like the one I run. But technology now has come to help us on that to a great extent. So we are deploying technology where it's necessary. If you go to hospital today, as an insurer, I can be able to know for a fact that there was somebody in hospital today because you're using biometric. I can see your SPED or your utilization of your cover, as it happens almost on a real time. Initially, it would be difficult. I just go with a card, only purely for identification. It was not even biometric. You present it to the hospital, and they treat me. And they can do all manner of shenanigans. Even after treating me, I can leave them there and they can add whatever they want to do. Today, it is a little bit harder for somebody to be able to do that. Fine, of course, anybody who is fraudulent would want to be ahead of even that technology. But so technology has really helped us. I think awareness has also increased amongst also the policyholders, especially after COVID. People now appreciate a little bit more. I have seen more people now. We have always had this saying in our industry that insurance is never bought, it's always sold. It's almost like you never used to hear anybody saying, can I buy this? It's like we used always to be the people to take it to you to buy. But that, very thankfully, is changing. Because people now asking, can I buy a medical cover? What is even now shocking me is the last expense cover. It's gaining a lot of currency. Just last weekend, I was in a church, a church, at the pulpit, talking about last expense cover. Because so people have started appreciating. So I think that awareness has also helped in terms of dealing with fraud. People now appreciate a little bit more that I don't now have to misuse my medical cover. My car insurance is actually an asset for me. It's actually a tool that I need to safeguard. But that does not mean that we still don't have the fraudulent cases. They are still there. But I think what we are doing is a little bit using more technology, deploying different technological advancements that are able to detect. If you run now a scheme in a medical, if I use a bit of medical or even motor vehicle, it is possible to know this person was in hospital, treated for this illness, but then he also went to another hospital that we didn't have comparative tools. You know, if for instance, I went to repaired my car last December, and then come April, I went to another garage and perhaps did something else. The cost of repairing a bumper in December perhaps would have been different in the one in April. But now with technology, it's very easy to compare those two incidents and say, how would it be that within a span of 2 months, this same car, the same, and there is no inflation, so to say, how would it be the bumper costed 20,000 shillings, but now this time is 60. So I think we are trying to address a lot of those issues, but I think more critically and more helpful for us, it's not all those technologies, because nothing will ever beat fraud, no matter what you do, more than the moral well-being of people, the understanding, the awareness, because that is what, even when you are in a secluded place, you know for sure I cannot be able to exaggerate my claim because I need it and I know it is helpful to me. So I think more awareness, and I think we're trying to do that as much as possible. And of course, using platforms like these ones, we are able also to expose, as it were. And you know, it is not that we are the only people who face. If you look at the banking industry, if you look at the healthcare industry, if you look at all, they also have their own share of fraud. It's only that sometimes it's not spoken openly. For us, sometimes because we have to make a lot of declarations, we say it.
You have to convince someone why to buy it.
Exactly. Yeah.
You also mentioned something about insurance at our workplace, and I know this might interest a lot of people. So does it mean that there is an insurance in a case where maybe I lose my job, that is a redundancy policy? Is there something like that?
There is redundancy insurance, but unfortunately in our part of the world, again, our industry is still growing because you need a lot of goodwill first and foremost. And you need a lot of resources. So some of the industries that then redundancy insurance operates proper, it's where they have been able to accumulate enough resources. And then declaring redundancies go through some certain, you know, rigorous legal requirements. Now, in our situation here, companies just wake up and declare redundancy at the slightest, you know, challenge economically. Then I think we'll be able to clear up. So there is redundant insurance in terms of catering for people who are unable to meet their daily obligations. They had mortgages, they had hospital bills to pay, but we haven't reached there yet. It is something that we aspire. There could be one or two. I am not too sure. I know actually, you know, anybody giving redundancy in this part of the world. And remember, we could be number 3 continentally in African, the Kenyan market. I think only South Africa and perhaps Morocco are ahead of us. We actually, you know, ahead of Nigeria in terms of even penetration. So if Kenya then doesn't have a well-developed redundancy insurance program, then you can imagine the rest of Africa where they were. But I think that is where we are hoping and going. However, there are many ways you can look at how redundancy insurance can also be mitigated. That is by way of having a policy like a pension, so to say, where you have been putting your retro money by and by, so that in the eventuality that something really happens, then you have a fund you have created that you can go to. So I think that can be a good reference for us, more or less like the redundancy cover. It may not necessarily meet all the thresholds.
What does it entail?
It entails that if somebody has lost his job and company has been declared it's not a going concern anymore.
Yeah.
So you had obligations, you had mortgages, you had school children, going children, and those are basic human needs that you must continue meeting their financial needs. So that insurance now come in. It's like a medical cover. When you fall sick, it kicks in and helps you to cater for your financial bills in hospital. That is what a redundancy insurance basically does. That it comes and pays on a regular basis, meeting some of your regular obligations. We had one insurance by one of the insurance companies that was giving cover when trucks, for instance. They are on loan. You know, you have a facility with a bank or a financial institution. It's involved in an accident, and then now your monthly obligations have arrived. The vehicle is still garaged. It's not yet working, but you need to meet that financial obligation. So there was a cover, an insurance company innovated in our market that was giving such kind of a coverage that every month, I think for a period of like 3 months, they will be paying you some certain amount of money out of pocket to be able to meet your obligations. But again, because again of lack of enough numbers, because somebody must contribute to it, you must pay a premium, just like any other cover. So we don't have many people contributing into that. Like I remember what I was saying earlier, you need a bigger pool where me and you and everybody else as employees, we put in our little buy the premiums, bits and pieces, so that eventually if any of us or a company or any company then is wound up and we are all declared redundant, then that policy would kick in. So it hasn't grown in the manner that perhaps that we would want. But it's a insurance, our market is not that very old. We are looking at markets like in London, Lloyd's market and other markets in other countries that are big. And a lot of people are putting in money there. But I think ours is still, I think we just passed perhaps Gen Z, we could be millennials in our journey of insurance. So we are growing, but I think we're catching up pretty fast.
Now, who is to blame in this case where now we're not, I think we're not talking much about this redundancy insurance or redundancy policy at work, because if we are talking about we are yet to tap into it, is it that we do not have job security enough in Kenya, or isn't the job market or maybe employers much informed about redundancy insurance?
Yeah, I think that's a good question, and I don't know where exactly to put the real blame on, but I think, like I said, it's something that evolves. And when, let me give you an example. Just a few years ago, before the bomb blast, terrorism cover was perhaps at the lowest. There were very, very, very few companies that were giving terrorism cover. In fact, in most of the covers, it was a specific and express exclusion. Exclusion is those things that you don't cover. COVID is a pandemic. Pandemics generally in all policies are exclusions. Right now we are covering COVID as a standalone cover. So is terrorism. In fact, now terrorism has become almost a standard cover, including even in the motor vehicles. So I think there is the question of need has been there. We have been lucky not every other day we wake up and companies have been declared people redundancy. So I think therefore as a result of that, seeing that not many companies are going broke, then I think the need has not come. But as we see now the turmoil that is happening in the economy, companies are, getting either, companies either getting competition and environment from abroad, companies from abroad or other areas. We are now starting to ask ourselves, then how do we cushion our employees? We just saw CMC announcing their departure from the country. Now, this is a 40-plus-year-old company domiciled in our country. I mean, it would have not been 5 years ago, perhaps nobody would have ever thought, right? We saw Nakumat, a huge giant and a few of such names. So I think as a result of, because insurance is, to a great extent, is driven by need. Like I was talking about terrorism, like I was talking about fraud. Talk about mobile. When mobile came, a lot of insurance companies actually rushed to say, we don't cover mobiles. Today is again standard cover in our household covers, or even in our property insurances in our offices. So I am also seeing redundancy covers in this country getting to start now. I mean, you have now talked about it. You have had now somebody actually talking about it. That is not a discussion we would have had with anybody 5 years ago. But I think the need, because remember, we are risk managers as insurance companies. We don't run away from what sometimes people think actually we do. We don't. We don't run away from risks. What we will do is that, yes, we may start covering it within some certain framework so that at least we know. So I think going forward, I'm with these kind of discussions and concerns that are happening in our industry, it is a question of when, not if, we see a real-time robust redundancy cover kicking in. Because the need now has been realized. Because when there is no need, remember we operate on numbers, the rule of large numbers. The bigger the pool, the safer it is. Because to me and you, if we have a risk of 1 million shillings here, and we're only contributing 10,000 shillings a month, and one of us in the third month has a misfortune, our pool of perhaps we will have contributed 60,000 would perhaps not be enough to cater for misfortune. But assuming we were 100, each one of us raising 10,000 shillings, within a month we have hit 1 million. So meaning even if one of us has a problem of 100,000 shillings, our pool is very easy to kick in and pay out of it. So I think the critical numbers have not necessarily been there. They are growing, and it's a question of when, not if.
And you know, I wanted to also ask why maybe you think insurance is often overlooked or maybe undervalued by many people in Kenya. And to be life insurance, let's talk about life insurance. A lot of people fear life insurance because maybe, I don't know what it is about, you'll tell us about it. But what is it that surrounds it that maybe, let's say somebody takes life insurance and you hear somebody's life has been taken away. So what about life insurance that really has no security and has a lot of fears surrounding it?
I think the only correction I would say is that I think that the perception is still there, but I think it's changing. One, I must admit that I think our training of especially the insurance agents was wrong. Because we used to have what you used to say tied insurance agents who only work for a specific company and they are only trained only on the products of this particular company. And so we used to have, a lot of people going out there to sell insurance, saying, if you die, if you do all those things. And remember where we are coming from. We are Africans. We don't talk about death. Today we talked about openly, like I was just talking about the last expense. So I think the training we had given the very valuable people, called agents and brokers for that matter, who used to go to people. So I think the whole education and information that we were laying out there was wrong. Remember, we only used to know, let's say, a product of a particular company that I used to sell to. And it was almost like a matter of life and death. If I don't sell this, then I don't have a livelihood. So I think training was bad. Then the product mix was also wrong. I think that most of the products that we were giving, first of all, yes, they were long term, but I think they had also a very low return on somebody's investment. And I don't think we also as an industry did so well in terms of managing people's expectation. If you go to Upper Hill today, you'll see a lot of buildings owned by insurance companies and such. Now, I would imagine a lot of people would have had serious concerns. I thought I was supposed to be a part of this building, but what I'm getting, the return I'm getting on my investments in terms of this life cover, it looks like it is meager. But now a lot of changes have come into the industry. We have now better products that really speak to you and me in terms of need. If it is, for instance, investment policies or even these life covers, some of them now have, instances where you can actually be able to cash in them, right? The returns are better. They have more wider coverage in terms of what now you are covered for. And they come in different facets, right? For instance, like I said, you couldn't, as a pension, you could not break it, right? You couldn't, especially your own contribution. If you start saving, if you said your retirement age is 55 or 60 years, you have to wait until that time comes or death comes. But today now you find a lot of flexibility. So I would say now a lot of our policies, especially on the life side, are also flexible, including also general. There is also now a lot of flexibility. We have better education, more educated agents now. Now the agents that we have on the street are really, they are as good as any other person. Then of course the technology has really helped. People now are a little bit more wiser. You can be able to ask questions. You can do, initially, people like us who are intermediaries, we are the only information giver to the world. And if I tell you this cover is the best in the world, you either believe me or perish. Yeah. But today, Mr. Google is there, ChatGPT is there, and all these other tools. So we had to also sharpen our communication skills. So I think also people now have a better understanding of insurance than it were before. We have also a much more educated populace who are actually questioning this. So people will put you now into a new perspective and say, why should I put my money in a life cover or a pension and as opposed to a money market fund? So you see, you have to then to up your game. Otherwise, I have now better competition where people can, especially the young generation now, they also know better places where they can.
Who are the next of kin?
Sorry?
Next of kin for life insurance.
Next of kin.
Next of kin.
Next of kin.
Yes.
Next of kin basically is any person who you'd want this policy basically to benefit in your absence. Maybe your wife, maybe your child, maybe you could give given it even to an animal orphanage if you want, for that matter. But generally, I think 99.99%. Basically, it's your relative, somebody who is related to you by blood or in otherwise, maybe marriage, a wife, a child, a father, a mother. Those are the next of kin. And the reason you do that is to avoid a lot of rigorous legal processes, especially where somebody dies, what we call intestate, without a will. And then my policy has to be subjected to now that whole process of succession. So you appoint somebody who is your next of kin, so that as soon as perhaps I'm not there or somebody else is not there, the policy you have instructed in your lifetime, who these benefits of this policy, for instance, are supposed to go to. So that is the next of kin. And
I'm asking this because when I'm talking about cases where spouses have killed each other because of this life insurance, if you as insurance companies or insurance experts are getting deep into this to see who really needs to be your next of kin, if you have to choose for them, because we've seen, if you're talking about spouses being next of kin, we've heard of cases where spouses kill each other for life insurance purposes. So do you really decide on who should be your next of kin, and what are you doing about it? Because these cases are there at the end of the day.
No, we don't choose for you who your next of kin is. What we perhaps can be able to argue is where perhaps we can be able to move to court and say you shouldn't benefit. And I think the law would not allow you to benefit from your illegality. I don't know whether we have too many decided cases to that effect. As to who then, in the event that perhaps you orchestrate the death of an insured person so that you can benefit from that policy, I think the law would abhor in a big way, would really look with a lot of disdain such kind of action, where you occasion death so that you can benefit from it. I think the law would really abhor that sort of activity. And remember, as an industry, anything that is against public interest will not, most likely that this money would go to the public trustee, I don't know, but that is, I think, for the legal fraternity, although I'm part of it. But I think the critical thing is to say that as a policy, as an industry, we cannot condone somebody benefiting from their own legality. And I can give you even another example. If your car is giving you trouble, you buy this beautiful car, and then you realize, no, the spare parts are impossible. You can't roll your car, or you can't smash your car, so that you can claim insurance for it, right? And until very recently, even things like attempted suicide, you are not covering. But I think now there is school of thought, and I think now there is registration to that effect, that attempted suicide, or even suicide itself, is more of illness as opposed to what we have always taken it, that it is a willful attempt to your life. So there are some modifications that we continue as an industry, as a society grows. But where intentionally you light your house on fire, you smash your car, you throw your phone away, or you are careless, if you have your nice jewelry, one of the things that we don't insure is the loss is occasioned by an unknown reason that I just don't know, because we want you to be responsible. So even now, in the case of life, therefore, if somebody then plans and plots and executes a plot murder on a spouse or your next of kin, and then we'll leave the law to take its course. But I can guarantee you, we would fight it to the nail to ensure that you don't benefit from a legality. Otherwise, then you kill a whole industry, because everybody then people will start killing each other.
All right. Now, say for instance, I'm a young male or female who is just starting out in the workplace, and I want to start off with choosing an insurance policy. What would you advise that I go for? The most important insurance policy for us, somebody just starting.
If I had my way to force all of you guys who are young, I would say, please start a savings scheme, pension plan. Start a medical cover. Start a life cover. Because you may not at that point in time have accumulated all the properties that you have. Most likely for a lot of young people, what they would perhaps possess at the beginning of their lives is a nice phone, a good music system. So I think in that order, I would say have a medical cover. A lot of young people miss the opportunity to have a good medical cover that you'll pay slowly, that is not expensive. Because in most of those policies, it is actually based on age. If we take the same policy with you today for medical, for $1 million shillings, I can guarantee you'll pay almost a third of what I will pay. The same cover, same coverage, because I'm more prone to illnesses than you are. Therefore, it helps to take these covers a little bit early when you still are in good health. The insurance companies also take cognizance of that fact, that you also may not spread unless there's an accident or something like that. In all probabilities, in terms of probabilities, you are likely not to go to hospital than I would do. And therefore, start medical, start a personal pension plan. A lot of us, when we were young, remember I was also young at some point. And I kept on, I had this very, it's not completely dead. I wanted to retire a little bit early, but yes, it's a wish I want, but I have not done enough in terms of making that plan. And of course, any plan that is not well documented and action, it's just a wish. So start a medical cover, because as you grow with it older, you can now even have it for a lifetime. It will reach a point whereby when other companies are rejecting people of your age to enter, or they are seeking medical.
There's an age limit?
Oh, yes. Okay. You can't come when you're 85 years old and get a cover, because you're almost certain that we're going to spend this money tomorrow. So unless I'm charging you equivalent. But if I've worked with you all the last 20 years, I'll work with you most likely until the end of your life, or until you are economically active and you are perhaps able to pay. So it helps to start early. But I think for purposes of securing our future and having a very stable people and families, I think savings, for me, things like personal pensions, things like life covers that have an investment component are critical. In terms of, today we may not be able to go into the nitty-gritties of them. I hope you're giving me a chance. So we can break it down and we say, take this particular cover. But I think medicals are important. Life covers are important, that have a future outlook. Let's not only cover what I can enjoy today. Let's also look at things that I can also bequeath. There are some communities in this country, when their matriarch or patriarch dies, they don't start from where me and you, this part of Africa, we come from. They know our parents have left a beautiful policy that you cash in 20 million. And his father had left one that left him 5 million. So you'll find the growth and of these particular communities exponentially. They never have to keep on having like a start in their lives because they have already been given a foundation. So let's know some of the things to start.
Yeah.
But all insurances are important, but there are some that I would say for purposes of even your future well-being, when you know that at 40 years, you have enough money to live on, you can actually start giving back to the society. So we don't have to struggle at 50, 60, you are still trying to put up your life together. But if you had started early, remember the earlier you start, the fund will continue growing. Now there are many funds that you can accumulate and collate with others. And initially you couldn't be able to get a pension scheme alone, or even 2. You might have a minimum team of 10, members to be able to start. Today alone, as a person, as an individual, you can be able to do that.
Now that we've talked about the insurance packages to start with, what should I be putting into consideration when choosing an insurance provider? One,
of course, it is the management. It all boils down, like we all say, on leadership, everything. There are quite a number of companies that one would want to be a little bit careful because of the way they are managed. So leadership in an insurance entity is very, very critical. So knowing perhaps who are the stakeholders in it is critical. Now, luckily, because you may not be able to do, so I'm saying do a bit of due diligence. Don't just meet with your friend who you were in school the last time it was 5-10 years ago, and he tells you now I'm in insurance and let me give you my cover. This is, what's your pay bill number, and you throw your money in there. Do a little bit of asking. I chair an association called Association of Insurance Brokers of Kenya. There are also other associations like for agents. There are also other associations for insurance companies called Association of Insurance, Association of Kenya Insurance. At least get some basic understanding of this particular company. There is also a lot of information even on the internet, again regarding insurance companies. So IRA, yes, helps us to be able to know that everybody who is licensed is regulated, but that in itself, because you never know on a day-to-day basis how a company is being run. So I think get a little bit of more information. If you come to any broker, we understand the market very well. I would say it's just like, for instance, when you want to conduct, like if you're going to go to even a trip, you don't hop into a plane and just arrive in Maldives. It's called Maldives and Singapore and stuff like that. No, you are somebody. When I go, where do I go next? Which are the tourist attractions? Not that you couldn't have gone alone. You could, but then when you are in the country. So the same case applies to us. There are people who are well tasked with and who have been there in the game a little bit longer, who you can ask. Insurance brokers, if you want to use an agent. But so that they can now tell you, for this particular insurance company, this is their strength. Yes, they are big, but perhaps they are also too big for you. They may be too small for you. Their management style is like this. So I think it is important. So financial stability of a company, remember some of the things that you're coming to insure your property, even if we call it short term, is that whole 12 months. 12 months is a short or a long time depending on a particular company, well-being of a company. So you don't want to put up your nice car in this particular company. You have a misfortune, you've moved an accident, it's written off or it's damaged, and you cannot be able to be compensated. You don't want to put your savings in terms of a pension to a company that you're not so sure whether you survive the 10 years that you have put in the money there. So it is therefore prudent that you take a little bit of, just like you do anything else. When you want to open a bank account, when you want to go to a doctor, when you want to go to a dentist, you ask her out. who you know, and there is more information actually. If you just check and say, I want to know, is there an association that caters, that insurance brokerages in this country that can help me? The information is, we are awash with information on the net. But the financial stability, the management, the longevity of that company, the track record in terms of payments of claims, it's very, very, very important.
I want to bring you back to what you said about retirement, of course. And let's talk about this civil servant who is now retired and they realize that their pension is too little for them. What happens in that case? And maybe at what point should we start thinking about retirement?
On day one.
Of work?
Of work.
Okay.
Unfortunately, if I use my own experience, the person who told me to start saving for retirement, I looked at him and said, look, Charles, are you saying I've just started life. And that's what I was talking about. We need to have this education a little bit earlier so that when I hit employment day one, the first thing I enlist is my savings. So the best time to start is on day one. And you instruct your HR and say, please be putting 10% or 5%. Remember, the longer you put in your money, the longer it also continues earning. And if you are putting 5,000 shillings today for a year, by the time you start the other year, it is not 5,000 shillings anymore. It is 60. So you start the second year, for instance, at 60,000 shillings. So by the time now you are going to the fifth year, it is not 60 times 5. Remember, there is, you know, and especially if you are putting this money where it's earning interest and even perhaps accrued interest. You know, what we call it, you know, we call it cumulative interest. So, but since it is not possible perhaps to have that wisdom at day one, the next day is when you are hearing my voice. Today, please, it doesn't matter whether it's only 1 year or 2 years remaining in your working life. It is important that you start working on your pensions today. Because just like we all sleep and wake up hoping that there will be sunshine the following morning, so it is with our retirement. It is a given, it's almost certain. I don't even know why we don't see it that way. But I think it is what I said is that, remember, there is no incentive. We didn't hear this information at day one. The reason why we have a bit of respect for money is that as a young kid, you took a shilling and you went to a shopkeeper and told him, give me a sweet. He told you, no, kid, 1 bob cannot buy you a sweet. You need 5 shillings. And you go home asking, so what is the difference between 1 and 5? And you get to start appreciating what we would call the value of money. The same way, if we had been told to start putting our money slowly by slowly, today we would not even, as a country, most likely will not even be borrowing abroad. We will be borrowing from the pension schemes and funds that we would have created in this country. Because we have a lot of young people who are making some tidy living. They may not be necessarily millionaires, but somebody who can afford 1,000, 2,000, 5,000 in terms of a saving. But now we are all consuming it. If you are all put in where they are growing and earning some interest and helping develop the nation, we really have made a lot of strides. So I think any day that realization therefore comes, that I need to start saving and looking forward, please do it. Unfortunately, when you are realizing that, then of course the other responsibilities, school fees have come and stuff like that. So why not start early? Why not start an education plan for your cover, for your child? Because you know, I've gotten the job market. The next phase in my life perhaps is to settle down in a family. So obviously, God willing, if He blesses me with children, I will children need to go to schools. Therefore, why would I then stay and earn money on the day they go to school when I would have actually had 15 years or 10 years or 7 years to start something? So I think it's just a question that perhaps you need to call us more and give us more platforms. And I think we also need to go out there and really educate our people. But I really advocate where we disseminate this knowledge, this information and understanding at an early stage. Because I think when our minds are growing and we appreciate integrity, for instance, is it being taught in school? You know, do we know taking somebody's rubber or pencil is bad? Do you know? Because now some of these issues we neglected them a little bit early. That's why we find ourselves in the mess, sometimes we find ourselves even as a nation, as a people, as a community. So the same way, I think if our might are tuned that we need to start saving on day one, I don't think it will be a struggle. So I advocate, and I hope I can use your platform to say, please, government, help us to be able to start a financial literacy class at primary school, so that people start growing, knowing the value of insurance, value of savings, value of life covers. Government will not even be worried about SHA and SHE and all these issues that we worry about. In fact, now would be, people will be joining intentionally and willingly, because they already used and they have the knowledge to be able to do that.
Yeah. All right. Thank you so much, Anthony Mwangi, an insurance expert, for being here to help us with this conversation. But of course, if somebody wants to contact you and just have this conversation on the side with you, how do they find you as a close?
One, they can find me at the College of Insurance. College of Insurance is the headquarters of our association called Association of Insurance Brokers of Kenya. I am privileged to chair that association. We have a very robust intermediary section of our insurance industry. I'm also running an insurance brokerage firm called Sunlad Insurance Brokers. That is located at Gracelad Court in Nairobi, Gara area. Can I give you, viewers, my telephone? Beautiful. My number is 0722 86 1115. 0722 86 1115. And we don't charge for insurance consultants as brokers. We give it free. If you buy insurance, you don't even pay us. We are paid by the insurance company, what we call finder's fee or commission. So any question on insurance, you have claims out there, perhaps they are messed up and you don't know what to do, we give that free, that service in terms of consultancy and advice. Purely free, because we want a lot of people to know about this insurance. As AIBK, for instance, that is one of our mandates, to ensure that, at least we ensure that a lot of people come to learn and understand and appreciate the role of insurance. All
right, thank you so much, Anthony, for having this conversation with us. Remember, there is an age limit. You cannot get an insurance if you're 85, so the earlier, the better. Farming is coming up next. Stay with Morning Cafe.